Hey everyone, this is Jim from Turning Point Life Investment, and this video is for August 15, 2008. And as you know, today's options expiration for the month of August. So I'm going to do a special video for you guys. I'm going to show you guys what kind of positions that I've been placing this month, and also what type of trading style that I normally do from a month-to-month basis. Now, if you guys don't know, options do expire every single month, and because of that, I want to take advantage of the time decay and take advantage of the expiration factor. Now, these are the positions that I put on for this month. The first one I want to take a look at is SPY right here. This is what's called a credit spread. A credit spread basically means that you're selling options and you're hedging yourself by buying another option, so that way you're not selling naked options. So my short leg, which is the leg that I sold right here, is a 133 call, and I bought protection at 138. So it's a 133, 138 bear call spread. Bear call spread basically means that I want to make sure that prices are going down, which is bearish, right? Hence the name. So when I initiated this trade, I received 70 cents credit right here. Okay, so I sold 133 and I bought 138, and my net credit is 70 cents. Let me show you what that means on the chart. So 133 is roughly right here. Okay, so all I really need to worry, let me take this out right here. All I really need to worry about is, as long as SPY stays under 133, I will collect that 70 cents, which it did. It closed today at 130.17. So I really don't care what SPY does as long as it stays underneath my short leg, right? Which is perfect. If you're selling credit spreads, it's perfect for these kind of markets where it's kind of trending nowhere, side trending, or just really choppy. All you really need to do is just place the trade above it and just let it do its thing and just let it expire and collect the premium. Right, so that's basically a bear call spread. Okay, and let's take a look what happens, right? Exactly. So the 70 cents, there's still a penny left in the trade, but by Sunday, everything goes to zero, and I would have 700 bucks in this trade. The next one I want to look at is Baidu. Let's take a look at Baidu. Okay, I initiated this trade, I think sometime earlier this Tuesday, when prices are coming down. Okay, 300, really good support. Right, you see this gap, and also 300, it's a round number. Round numbers are usually great for support and resistance. So on the day of this dark candle, I didn't want to get in. I want to make sure there's at least some buying pressure, and making sure that 300 holds, which it did on that Tuesday. So I entered onto Tuesday. I collected 75 cents for this trade, 10 contracts, so that's 750 bucks. My short leg is 290, my long leg is 280. So as long as Baidu stays above 290, okay, which it did, it closed at 321, right? I will collect the entire 750 bucks, okay? And once again, that's what happened right here, right? And the last one I'll show you guys is APA. APA, same thing. Downtrending, kind of oversold. So I decided, you know what, 100, nice hammer right here. See this hammer candle? Right at 100, round number, same thing, good support. So I entered the next day, right, Tuesday. So these both Baidu and APA, I only held for about 4 days. I initiated the trade for to collect 55 cents. I only did 7 contracts, so that would give me about 385 bucks for this trade. And that's exactly what's going to happen by Sunday when everything just kind of clears out from the account. Okay, so with 3 spreads, I managed to make 1750 for this month. Both 2 positions I only put on like earlier this week. In case if you're wondering, this is a naked put, so I did sell puts for WAMU. Let's take a look at WAMU. Okay, the reason why I sold it under $3 is I sold it underneath this low right here. So I didn't do a spread for WAMU because really you don't need to. The most you will lose is that $3. Now these, obviously I do have to buy protection because these are pretty high price options, right? So this you can simply sell naked puts, which I did. I sold 10 contracts. At that time it had pretty high IV intrinsic, not intrinsic, but implied volatility. So premium was pretty good to sell. So I just basically sold 10 contracts at 42 cents. And as long as WAMU stays above $3, which it did, closed at 455, I would collect the 42 cents. Okay, so altogether, 4 trades, collected about 2160 this month. So pretty good. So if you're interested in selling options, I strongly suggest you learn it either from books, seminars, DVDs, whatever. But I really want you guys to learn it before placing a trade. All right, otherwise you can start losing money if you don't know what you're doing. Another thing that most people like to do is what's called iron condor. Iron condor basically is two credit spreads put together. Now you have a bear call spread above, and then you also have a bull put spread below. So I can also put a bull put spread if I wanted to, right underneath. Let's just say here. So as long as SPY stays in the middle, I would collect both above and below. Okay, and that's what's called an iron condor. No mystery there, right? So there's a lot of different ways. That's why I love trading options, because there's really a lot of different ways and versatility you can trade options in a sideways market, in a down market, and an up market. So whatever it is, every single month you can still make money playing the market. So you don't always have to look for uptrending stocks, just like how you would do if you only bought stocks. Okay, so hopefully this video kind of gave you an idea of what type of trades that I do and what type of trader that I am. Okay, so talk to you guys later.